Bitcoin is about to undergo one of the largest supply shocks ever seen within the history of cryptocurrency. And that's because we're approaching the 4-year cycle, the halving cycle, where the mining reward gets divided in two, and that moment is just about to arrive. So, what does that mean for Bitcoin price and the rest of the cryptocurrency market as a whole? Usually it means explosive price action to follow. And in this video, I'm going to show you exactly why, what it means for you, and how you can identify what to do next. As you can see from the Bitcoin halving countdown clock, we're only moments away from that actual halving taking place. We're also moments away from the next whale school cohort, but more on that later. If we have a look over here, what exactly is the halving cycle? Well, ultimately every 4 years or 210,000 blocks, the Bitcoin mining reward gets divided by 2. As it currently stands, we're sitting at 6.25 Bitcoin, which get rewarded to miners for solving complex equations in 10-minute blocks. So every 10-minute blocks, they provide a whole lot of electricity and proof of work. And by solving those equations, they receive the 6.25 Bitcoin. So once this 210,000th block is complete, that reward will roll over and divide in two, meaning that miners will only receive 3.125 Bitcoin for the same amount of effort, or sometimes even more, because the equations become more and more difficult. Now, what does this do to Bitcoin price? Usually this creates a major supply shock to the market and leads price in the coming weeks and months to soar exponentially higher and lead into the final peak, which is why you need to watch this video, so that I can adequately prepare you for what comes next and ensure that you not only make a whole lot of money, but keep all that money before the end of the cycle. If we have a look at this graph over here, this is the history of Bitcoin's price appreciation following that significant event. This is the first halving that took place on the 28th of November 2012. And you can see in the leading 365 days, price goes on to appreciate 8,069%. Now, there is going to be a certain level of diminishing returns as the asset class matures more and more, but I'll show you why this time does have something very, very different which is taking place, which could make this one a little bit of an outlier. If you fast forward to the following cycle on the 9th of July 2016, where the Bitcoin mining reward again divided in two, you can see 365 days later, price goes on to appreciate 284%. In halving 3, which was the last one that we had, 11th of May 2020, 365 days later, price was then up 538%. Now, we like to use Bitcoin as a proxy for what's going to happen in the rest of the cryptocurrency market. Although a price appreciation of under 1,000% may be viewed as too little for those who are very, very risk tolerant, remember that we use Bitcoin as a proxy to understand where the rest of the cryptocurrency market will be going. And usually in the final phase of the bull run, which is just post that Bitcoin halving cycle, this is where we see the altcoin market sector and the rest of the cryptocurrencies go completely parabolic, putting in well above 1,000% returns, which is why it's relevant to look at. As I just mentioned, I said this time could be significantly different and could lead to one of those higher end price appreciation targets. And the reason why is this: it's the ETFs. The ETFs have come in as one of the hottest topics ever seen in financial industries. And if you look at this chart over here, you can see the spot net ETF inflow has been pretty much positive throughout. The only negative flows that we've had is due to GBTC, which are ultimately selling into the market to convert their trust into an ETF, which is consequently being absorbed by large players like BlackRock and Fidelity. This is creating a sense of complete FOMO, fear of missing out, by institutions, where they're filing as quick as possible to get ETFs approved so that they can legally buy up these cryptocurrencies. And this goes well beyond just Bitcoin. They're now already starting to apply for things like Ethereum, and later on I'm sure we'll see many other cryptos to follow. And if you look at this tweet over here, it says iShares Bitcoin ETF is now in the top 100 of all ETFs by all asset classes. So that is out of 3,500 different ETFs. And the most mind-boggling part of all of this is it happened in 90 days, which is completely historic, breaking every single record ever set within the ETFs. The institutional FOMO doesn't just spread to institutions within the US, but it actually spreads globally, where it's almost a type of a space race, but in this 21st century style around cryptocurrencies, where different nation states are racing also to get ETFs approved. If you look at this tweet over here, Asia is now attempting to come to the Bitcoin party. We know that, of course, the US are slightly ahead of Asia in terms of getting these ETFs approved and on-ramping new capital. Hong Kong is approving a Bitcoin ETF. South Korea will approve a Bitcoin ETF. Chinese fund managers are starting to launch Bitcoin ETFs. And the US Bitcoin ETFs have now officially pushed price from approval of a price level of $38,000 all the way up to $73,000. And the bull market is only just getting started. So to put it into perspective, there's very limited Bitcoin which is left, because the supply is fixed to 21 million coins, as we know. And most of those are held by long-term holders, which are not going to be selling anytime soon. And the rest of them have been lost. So if you have a look at this tweet over here, investors in the US ETFs own 838,730 Bitcoin, which equals to 4.3% of all the Bitcoin in circulation. If we exclude the Bitcoin that hasn't moved in the last 3 years, as per the long-term holders, which aren't going to be selling anytime soon, that means that the US ETFs own 8.4%. And when we're in this type of space race of the 21st century between different nation states and countries, you can only imagine the supply shock which is going to be coming as they start to rally and rush to get as much Bitcoin as they possibly can. So if we move on to where Bitcoin is within the rankings on total market caps, comparing to other commodities and asset classes, this is where Bitcoin lies right now. It's currently sitting in 9th position at just below $1.4 trillion market cap. Now, Bitcoin is about to enter into a complete paradigm shift. And the reason for that is because it's soon to overtake silver. Following the halving cycle, should price appreciate the way that it has in the prior cycles, you can expect that it will very, very quickly overtake silver, which is currently at a $1.64 trillion market cap, and start to close that gap towards gold. Now, this creates a new paradigm for cryptocurrency, because gold and silver have been approved and accepted by people for thousands of years as a form of money and a store of value. And now you have this digital currency, which many people in the world have never even heard of, which has only been in existence for around 13 years and very quickly starting to overtake something like silver. Now, this creates an exponential effect. And we know that Bitcoin's properties are very superior to what you would see in things like gold or silver, in the sense that Bitcoin is a harder form of money. It's decentralized and it's known as sovereign money, which is far superior than what you'd see in gold or silver, right? It's unconfiscatable. If you hold the keys, you hold the coins. Nobody can ever remove that from you. It's not bound by any form of borders. It's easy to transport. It's easily divisible, and it's completely global. What that simply means is it's reached that network effect where it's going to go exponential very, very quickly. And it's not completely out of the question to think that Bitcoin at $1.4 trillion could easily catch up to gold, and not only catch up, but surpass gold, which is currently at a $16.1 trillion market cap. Now, if you take this thinking a step further, you have Bitcoin currently competing with large companies like Microsoft, Apple, NVIDIA, Alphabet or Google, Amazon. And if you scroll down the list, you'll even see things like Tesla. And a lot of these companies will start to slowly adopt crypto and Bitcoin. Some have already added it onto their balance sheets, the likes of Tesla. Now, again, putting it into perspective of how much Bitcoin there is to go around and why this is such a powerful source of money, which you should ultimately be looking to get as much as you possibly can and store that away. So if you look at this chart over here, this is a visual of the Bitcoin supply. Now, each one of these little blocks will represent 1,000 Bitcoin. Now, this is the biggest conglomerate of blocks that you're going to see today, which is just over 2 million Bitcoin that's currently stored on exchanges. is. If you go down the list over here, these are referred to as zombie coins. Now, the chances of these coins ever moving are slim to none because they most likely lost forever. These are people who were never able to sell their coins. That's sitting at 1.7 million. That means that the 21 million supply, which Bitcoin is currently set at as the max supply that can ever be in existence, is actually in reality a lot less than that, since most of these coins have been lost. You have 1.125 million Bitcoin, which is currently owned by Satoshi Nakamoto, the founder and anonymous character who created Bitcoin. And these are also unlikely to ever move, as they've never ever been transferred. If you look over here, the next in line will then be the ETFs. So where are the ETFs getting their coins from? Well, we know that the ETFs are mostly buying their coins from Coinbase, which hold the 2 million coins. So when this eventually transfers into the hands of the ETFs, they're unlikely to move, which means that it's becoming harder and harder to get these cryptos. And if you look over here, Bitcoin being mined currently is at 328,500 per year. But keep in mind that will mathematically divide into as soon as the halving countdown clock hits 0. That will be exactly half. And now you can see from a visual perspective how little Bitcoin there is to go around. Ask yourself this. There's less than 21 million Bitcoin which will ever be able to circulate because a lot of them are frozen and lost. But how many millionaires are there in the world? When they start to understand what they're dealing with, this creates a major supply shock and price appreciation. Now, again, to take it a step further, Bitcoin is currently just under $1.4 trillion. If we compare the market cap according to different nation states, this would put Bitcoin slightly behind the Netherlands and just above South Korea. Above that, you have Australia, Taiwan, Switzerland, Germany, Canada, Saudi Arabia, France, United Kingdom, India, Japan, China, and at the highest, which is ironically also in the greatest debt, we have the United States at $53.5 trillion. Now, Bitcoin as an asset class can very easily start to consume a lot of the debt within the economies and slowly start to climb this ladder. So we already have evidence that nation states are buying Bitcoin, which naturally will send Bitcoin's market cap higher and higher, meaning it's going to climb this ladder very quickly. The first one that we can mention over here is El Salvador, who's currently dollar cost averaging into Bitcoin by buying 1 Bitcoin every single day. They're even using volcanoes for the energy source to mine these Bitcoin, which is absolutely unbelievable. We're seeing the FOMO by institutions into Bitcoin. What happens when the nation states start FOMOing into Bitcoin? Well, there is an anonymous account over here which has been referred to as Mr. 100. Now, this is an address which has been purchasing exactly 100 Bitcoin every single day. They now own 59,000 Bitcoin. Now, this is unlikely to be an individual and more likely to be a nation state. You have prominent figures within the crypto space like Max Keiser predicting that it is a UAE nation state, possibly Qatar. If you look over here at the next tweet by Fred Krueger, he's asking, who is Mr. 100? Is it Mark Zuckerberg? Is it a Middle Eastern buyer, Jeff Bezos? Or is it someone else? Well, you can see the vast majority also believe this is a Middle Eastern buyer, most likely a nation state. Now, when they eventually spill the beans that they've been buying Bitcoin, you can imagine the FOMO that might start to come in by other nation states, and Bitcoin price should appreciate. So now that you understand the fundamental reasons for why Bitcoin's price is likely to appreciate, we can look at the history of what's happened previously, and we'll look at some of the technical analysis and the charting techniques which will help you to identify when the market cycle may top and give you an idea of how long we might have left within this absolutely mammoth bull run. So before we get into the details, if you would like to learn more about how to analyze these different charts, remember to sign up to Whale School. It's entirely free. It's a course valued at $3,000. But for those of you who are first and quickest, if you click the link in the description below and you sign up today, ultimately that means that you will be able to enter into the next cohort for completely free. So if we have a look at the chart over here, I have Bitcoin on a monthly time frame, and the reason for that is to simply give you a broad overview of the way these market cycles work. It's absolutely critical to understand the market cycles within crypto to ensure that you're applying the right amount of risk at the right time and you're playing a more defensive game when you should be playing a defensive game. People tend to do it in the inverse. They tend to be very, very scared at the bottoms when they should be playing offensively and incredibly aggressively, and then they tend to play most aggressively when it seems like an easy up only market, and really they should be playing defensively. So if we have a look at the overview of this chart over here, you'll notice the first thing that I want to outline is the bottoms of the market cycle. You can see from the January the 1st 2015 bottom to the next bottom was 47 months. That is the exact bottom. Now, if you apply that same 47 months, it marks it to the exact bottom of the next cycle, which was the FTX collapse, which happened in November of 2022. If we use the same theory and we apply the tops to tops, you'll see we have 49 months to 49 months, and then we have 46 months from that top to the next top, and then from this one to the next top suggests that anywhere between 46 and 49 months is where you could expect that major cycle top to occur. Following the halving cycle, which is more or less exactly where we're at now, you can usually mark out about 12 months from then where you want to start playing a defensive game and getting a little bit more careful within the market. We'll look at another chart to outline exactly how the halving cycle works, where it looks a little bit more clear. First, I just wanted to lay a bit of a foundation. That foundation has now been laid down. We can now look at the RSI to help give you a bit of an understanding of where we're at. Now, if we use the RSI, which is the relative strength index, it shows us how much momentum is in the market and whether the bulls who send price up are in control, or is it the bears who send price down which are in control. In this instance, as it moves towards the upside and the yellow moving average is curling up, it's suggestive that the bulls are in control and it's a bull market. Now, historically, what we've seen when we study the RSI on a daily time frame is when it closes above 73 for multiple days and Bitcoin price is approaching near all-time highs, Bitcoin goes on to double in price within a number of weeks following those closes above 73 on the RSI. The RSI has been at 73 for a number of days. It's even closed a monthly time frame at about that 75 level. Now, you can see the real parabolic moves actually take place once the RSI is able to break above 80 as marked by the horizontal line. Now, you got a downsloping trend line, which can be used when analyzing the RSI, and you can expect somewhere around there for the market cycle top to occur as that RSI starts to peek its head into or over that downsloping trend line. So you want to keep that in the back of your mind's eye for your macro analysis of Bitcoin. And this has been the effectiveness. As you can see over here in the prior run, when the RSI started to cross above that 73 mark, closed there and had multiple candles approaching that 80 area, that's actually where you got your big parabolic moves. You can see how much higher it went. It went up twice within that cycle before ultimately setting in a major cycle top and coming down. It did exactly the same thing over here in the 2017 cycle, where price was oscillating all the way down here just under $1,000 and proceeded to rally another 2,000% when hitting into that trend line and setting in its top. So don't underestimate the power of this. The same thing is true over here. If you look in the 2020-21 run, ultimately the RSI broke above that 73 mark right about here on this candle, and price continued to rally up almost 300% from that point onwards. So what does this mean? It means there is still legs left over here. There's still gas in the tank and price can continue to appreciate. So don't get shaken out. Around the halving cycle, it's very common that volatility will increase and prices will oscillate up and down within a trading range for a number of weeks. And once those few weeks have been complete, the up-only parabolic blow-off top commences. So looking at the volatility in the prior cycles, you can see leading into that halving cycle, it's very common that the volatility index can shoot all the way up around 15. We've even had an outlier that went as high as 25. And this is from Stock Money Lizards, a really great chart over here. And visually, this is what it would look like. So if you look in the first cycle, a lot of chop in and out, shaking players out of their positions, making them fearful that things are going to go lower. And every cycle, there's some sort of a narrative that tells the market why they should be getting out. The current narrative is that the interest rate hikes are going to be coming back on the table, and the stock market has rallied too high, too fast, and it needs to come down. But every cycle, it's the same story or different narrative, but ultimately the result is the same. There we go. Shakes you in, shakes you out, comes back down. This is the one that happened around the pandemic. You can see big sell-off over there, sends price back to the upside, has one more shakeout. Now, these look like small shakeouts, but these can be in the region of 40 to 50% downside moves for Bitcoin, and then the up-only season commences. So this is currently where we're at. What does that mean for Bitcoin price as it stands right now as you're watching the video? It simply means that we could be in a trading range from as low as $50,000 up to as high as $80,000. And as long as it doesn't break below one of those levels, the bull run is still very much on, right? As long as it doesn't lose $50,000, the bull run is still very much on. So when we look at the halving cycle over here, this is what we've historically seen. So looking at the weekly time frame, you can see as price grinds up towards that prior all-time high, here's your halving cycle. It sends price ripping straight through the top side. Here's your halving cycle in 2016. That is a closer up look of what the shakeout looks like. If you look at this move over here leading into the halving cycle from top to bottom, that was almost a 30% move, and ultimately price grinds up towards the prior all-time high, consolidates there, and shoots through the top side. Here was your one around the pandemic. You can see coming into the halving cycle, price was still very far from breaking those prior all-time highs, which were coming in just below that $20,000 mark. Once we got there, we paused temporarily and price rallied straight through. This cycle has been different in the sense that we have the ETF demand, and it's the first time ever in Bitcoin's history that before the halving cycle, we've already gone on to make new all-time highs. And this could have a lot to do with that supply shock, institutional FOMO, and nation states which are not yet announced but are clearly buying up Bitcoin. So this consolidation will likely lead to a breakout. And even if you do see a correction that leads to 30 or 40%, so long as Bitcoin is holding above $50,000, the bullish pattern should still play out, meaning higher prices are to come. Now that you understand the way Bitcoin price can oscillate and the volatility can increase around that halving cycle, we're going to move into the next segment of this video, which is where I show you how you can clearly identify when the top is in for Bitcoin. This is very important, and most people would never even dare to attempt to call a Bitcoin bottom or a Bitcoin top. They tend to just stay within the market, and they say time in the market beats timing the market. But as a trader who successfully called multiple market cycle tops and bottoms live on the shows, I'm here to tell you that it is possible. And if you want to learn more about how to do this and my in-depth analysis and style of trading, again, make sure you take the opportunity while it's still there, whilst this $3,000 course is still free. Use the link in the description below and sign up today before we do get started with the next live cohort. Now that that's out the way, let's continue on with the analysis. If you look at the Bitcoin Pi cycle top indicator, it's a very simple indicator that uses two moving averages, the 111-day moving average and the 350-day moving average. Now, very simply put, the way this works is it tends to work as a mean reversion signal. As price moves up and pulls the short-term moving average into and crossing above the long-term moving average, that usually signals trend exhaustion, and that tells you more or less when it's the end of the move. So to to give you an example on a real life chart, this is what it would look like. In order to work this out, all you have to do is put on those two moving averages. The 350-day moving average, that's going to be the purple one, is the slow moving average. And then you're going to put on the 111-day moving average, which is the short-term moving average. Currently, price is above the short-term moving average, but still capped below the long-term moving average. And what you'd want to see is you want to see Bitcoin get above this level. And as it trades above this level, irrespective of where it is price-wise, you want to see timing-wise when this short-term moving average crosses up. As it crosses over, that usually signifies the top. And as you'll learn in Whale School, you often pull back into those crosses. That will lead to one more temporary bounce, leading to a complacency bounce. And ultimately, that's where you can expect your top to come in. Now, I don't want to give away the secret sauce of the course because that is for you to find out when you join. There's a little bit more to this and a little bit more that you need to understand when it comes to identifying the exact top. But this will get you started and curious. That's your first step. And finally, the last thing that you want to be focusing on is how much momentum there is or how much volatility there is within the market. So if you have a look at this chart over here, you can see areas of compression and expansion as per the Bollinger Band chart. That's on the top side. On the bottom side, we have the MACD, also known as the moving average convergence divergence chart. Now, when the green bars or the histograms start to tick up and you get a bigger and bigger one, that's showing you that there's increasing momentum coming into the market. You can also simultaneously time what's happening with the Bollinger Bands. Now, you want to see the Bollinger Bands spreading away from one another, signifying that you're moving into a strong trending move and there's market expansion at hand. This is currently what we're seeing. If you look at the price cycles, once the MACD starts to cross above the zero line, turn green, and the price moves above the Bollinger Band, closing candles above that level, that's usually where you start to see that expansion take place, confirming that you're in your final phase of the bull market. These are 2-month candles, which would be indicative that you have between 6 and 12 months left for the cycle. Now you can see we're yet to close a 2-month candle above the top side of the Bollinger Band, but we have crossed the zero line over here and the histogram is well on its way up, which means the expansion phase is only just underway. And that means you got at least 6 to 12 months left. Now, what's another way above and beyond the pi cycle top indicator, which you can use to suggest that the momentum is running out and the volatility has reached its ultimate peak? Well, you can use this indicator over here, which is the BBWP, which stands for the Bollinger Band Width Percentile. It very simply measures what's going on with the Bollinger Bands, as I've shown you on the other chart, but it puts it on a horizontal scale whereby it contracts below the 0 percentile mark. That would be the same thing as the Bollinger Bands compressing in towards one another, showing low volatility. As it starts to move and increase from that level, you know that volatility expansion is underway and the Bollinger Bands are moving away from one another and prices are likely to continue going up. Now, it's very important that you understand how to govern the overall trend, because this can be a double-edged sword in a downtrend. It can move towards the upside, meaning prices are moving down aggressively. And in Whale School, you'll learn exactly how to identify the trend and how to use other indicators to help you pinpoint exactly when to get in and exactly when to get out. Now, finishing off over here, what you'd be looking for is extremes on this volatility. You want to see the Bollinger Band Width Percentile reach all the way into that 100 percentile mark, printing bright red bands. And this is what it's looked like before. So this would be an example of it printing bright red bands, showing that you're reaching the final phase of the bull run, and you likely want to be looking to play a more defensive game and take profits. As it prints those bright red bands and we bring the chart back, you can see over here what happens with Bitcoin. Well, Bitcoin sets in its exact cycle top at just below $20,000, and that was the end of the bull run. So if you made it to the end of this video, congratulations, because you're well on your way to making an exorbitant amount of money. Simply put, because you're here at the exact right place at the right time. Now, to maximize the opportunity that's before you, I want to encourage you and remind you to use the link in the description below. Sign up to 𝗨𝗚 School. This is everything that I have condensed into an easy to understand course, which will take you through the A's to Z's of trading, and it will teach you everything you need to know to take yourself from a couple of thousands of dollars to potentially even millions of dollars in profit before the end of the cycle. And the most important part is not only to make the money, but to keep the money.